Hello traders, welcome back to my YouTube channel. So today I'm going to share a powerful price action trading strategies that will give you perfect entries. To understand this strategy, we open the EUR/GBP 4-hour time frame and draw a supportive trend line along with the major trend line channel. To understand market next move, after the draw the trend line, we need to switch to the 1-hour time frame and looking for a trading opportunity.
In this video, I will log into the members area and show you exactly how it works. Put in your email, password. Here we go. The charts are loading. Okay, we see the first three charts of the best trending currency pairs and time frames. The trend direction, pair and time frame, and the trend drawdown. The drawdown is very low. The trend looks very nice. This blue line is the maximum drawdown. This is how the best trend is determined. No indicators, but pure price action. You can read more about this method in the ebook you'll get right after you subscribe. In the next charts, the drawdown is a little higher. If you want to see more charts, click on Settings. Let's choose 20 charts. Save settings for the next time you log in. Go back into Trends, and as we scroll down, the drawdown becomes higher, but it might still be good for trend following. The first chart is always the best one. If you click on More in this corner, you'll see a quick overview of the same pair on the other time frames. In this case, most of the arrows are showing upward movement, which is a good confirmation. So let's go back into Settings. And here you can select only particular currency pairs or deselect pairs you do not want to trade or that are not in your trading platform. You can also deselect time frames, for example, the lowest time frames. You can set up alerts when the trend drawdown falls below, let's say, 15%. Then click Save. And the audible alert will let you know when the lowest drawdown on any chart falls below 15%. Another approach used by more conservative traders is to check the charts just once or twice a day and simply make a trading decision. Very easy. Now let's look into patterns. And what you see are, believe it or not, the automatically recognized patterns. Here's the pair and the time frame and the pattern name. Flag, triangle, falling wedge, so on. Notice that there are often more than two touching pairs on the trend line. This is because the recognition algorithm is very good. When the price breaks through the trend line, it's likely to continue in the same direction. So you can enter the orders just above or below the trend line depending on the overall trend. These are emerging patterns, and here's something special. The history of completed patterns updated in real time. They are actually confirmed patterns because the price has already broken through the trend line. The problem with emerging patterns is that they can change several times, or the price will not break through the trend line. Unlike emerging patterns, completed patterns can be accepted as trading signals. For example, let's click on the link. And here we see the flag pattern. The price has broken through the trend line and it's likely to continue moving this way, often with some pullback. You can set up alerts in the settings. Check the box near Alert when new completed pattern appears and click Save. And when the new pattern is confirmed with a breakout, you will be notified by the audible alert. Another approach is to check the charts just once or twice a day. Look in the history of the higher time frames and you see that trend lines work incredibly well.
Hello fellow traders, so we're back with another video. So in this video we're going to talk about something very simple but also something very fundamental to trading. So before we start about this lesson, I think I'd like to say that getting your fundamentals right is very important, because all your tricks and tools built on your fundamentals. So if you don't get your fundamentals right, then anything that you build on it will crumble. So one of the things that we always teach, or we always advocate, will be to trade with the trend. So naturally, that means that you must be able to identify the trend, okay, and try not to trade counter trend. Of course, in certain cases, you trade counter trend, but if you are still a new trader, you are still a struggling trader, try to make money following the trend. So without further ado, let's get into today's lesson. So today's lesson is about how do you identify trend. So I'm sure most of you know. Let me just get this first. Okay, how do I not extend this? Just a moment. Okay, so if you just, the definition of a trend, right, is actually just you probably know this. Okay, so the definition of a trend goes like this. You have a high, right? And you have a low. Okay, let me just okay, this is annoying. Okay, and then you have another low, you have another high. Just a moment, let me just, okay, so this is a lower low, sorry, lower high, okay, and this is a higher high, right? So this is the definition of a trend. So if you look at this euro dollar chart right now, okay, we can actually just draw it. One of the tricks that I like to teach our friends and students would be switch to a line chart when you're not sure, because in a line chart you actually see it very clearly, right? You see this is a up, down, up, down. So what do we have here? We have a downtrend. But more significantly over here, this region here, we see that there's almost like a double top. Okay, so the first thing that you need to know in trading is you need to identify trend. Okay, trend. So if we look at euro dollar right now at this moment, what's the trend? Maybe I give you some time to look at it. Okay, I mean the answer should be pretty simple, right? You have down, right? Then you have up here. Okay, you have a up here, and then you have a down. Okay, so what is this? Let's just label it. Okay, so this is a low. Okay, and this is a lower low. So it sounds simple enough, okay, but this is very crucial. Hi. So the question right now is, will we make a lower high, lower high over here? Okay, so of course we won't know until the market moves, but if you understand that the trend is kind of down right now, then you'll be keen to looking for shorts, right? You won't really try to trade this pullback here, because you know that you counter trend. Okay, so the next question is, how do you know that the trend has changed? Okay, so I think by now you also probably know that the two usual formation is a double top. Okay, this is a double top, right? And then, okay, this is double top, and the other one will be the head and shoulders. Right, just pardon me as I draw this. Okay, yes, so this is the head and shoulders. Okay, so one of the mistakes that a lot of new traders make is they always try to predict that, they always try to predict that the market has topped. Okay, if you're going to do that, you're going to be wrong most of the time, because, a trend continues like 80% of the time. So the question is, why do we always have the tendency to try to predict that, the trend has changed? I don't really know why, but this is what most people do. So in this case, I think we have to ask ourselves, let's just look at euro dollar, right? Do we see any of these patterns? So of course, the opposite of this would be double bottom as well as inverted head and shoulders. So now we don't actually see any signs of reversal yet, okay? So if let's say euro dollar is bullish, then what we need to see is we need to see it come here, okay? come down, which is inverted head and shoulders, okay, and then possibly back up. Otherwise, the other sign that would be better would be we see that price closes above this level, this spike high, 1.1190. A close above would mean that the downtrend has ended, okay, because the structure is broken. So I think one tip we like to share with you is that when it comes to trading, a lot of times we look too much on a single candle. I think a lot of traders, they look too much on a single candle. I mean, think about it. Trying to use a single candle to predict the entire movement, it sounds crazy, isn't it? So what you should focus more on is the structure, you know, the ebbs and flows. Like this is a down, this is a consolidation, this is a down, you know. So don't look so much on, you know, a single candle, right? We have a lot of traders, right? Personally, ourselves too. You always look at, you look at like a bearish engulfing pattern here and then you take the short. I mean, that has its place, but try to look more at the bigger picture, because if one candle is able to, you know, to predict the whole movement, it just doesn't sound right, okay? So I think we just like to end off this lesson with really understanding your fundamentals, really understanding that trend is very important. You should always try to follow a trend. So just a brief recap, we talk about trends being a higher high. For bullish trend, of course, a higher high, higher low. For bearish trend will be a lower low and lower high. Okay, in a reversal, we're always looking for a double top and double bottom, or inverted head and shoulder, or head and shoulders. Okay, so we'll see in the next one.